Hello everyone, I'm Mark Sain and welcome to Sain Investment Solutions. Please take a moment to pause this video and review the following disclaimer. Thank you for that. Welcome to week 48 of the Forex market review. Today we're going to take a look at a couple of currency pairs, but prior to that we're going to look at the news for the daily FX. And today being the end of November, the 30th of November, everybody out there who's doing Movember here in Australia, I've got my goatee going. Thank you very much for your donations. And let's see if you're going to keep it going, like I probably will, or whether or not you're going to be shaving it off anyway. Without any ado, let's jump straight to the news. So here we're going to take a look at the daily FX. When you come to this website, click on your local GMT time so you have the news in your local time, and then go ahead and filter on what you want. I'm going to look at all the news, but just the high and medium news for now. So working through, we can see some news announcements which have occurred, some German CPI numbers, some USD consumer confidence numbers which came in better than expected, and as well as some other news approaching. So what we want to do, look for this news just so we know what's coming up and what may happen in the market. So my main concern is I'm looking at a couple pairs which trade the US dollar as well as the US 30, which is the share index in the United States. And generally our Aussie 200 share index also follows this type of news. And one important news I'm looking for, which is coming up, which will occur on the first Friday of each month. If I scroll down to that, Friday, December the 2nd, it's going to be the unemployment news. So here's your USD unemployment rate and the change in non-farm payrolls. So what I'm hoping is that the unemployment rate hopefully drops, or at least stays the same, but mainly the non-farm payrolls, that number expected is 175. So if we can see a higher number than that, maybe around 200k, and maybe even a revise of this one here, even higher, that's going to put some strength into the US dollar. So overnight we had some good US dollar news, which didn't really see the US dollar push much higher again, but that's because it's having a big run recently and it's starting to settle down. So it could have a bit of a run. This would be the news to look out for on Friday, but it's the middle of December when the Fed decide on increasing the interest rates. That will be the big mover. So I wouldn't expect to have a bit of a pullback on the US dollar, ready for that move in a couple of weeks time back higher. Now let's jump to the charts. The first chart we're going to look at is the US dollar CAD on a daily time frame. So what we can see it's pushing up here, and it's definitely above the daily high-low line, but it's starting to match up with some resistance area around here. So between these 2 points was where we're going to look at some resistance area for a push back lower. So I'll just go ahead and draw those lines in. This is the DSR indicator, which can be purchased from our website, and if not, you just look left to see where it's bounced a few times. We then drop down to the 4-hour chart, and what we like to see is our divergence with our higher high in price and our lower AO. And so this is clear divergence because it's come back below the line before it's gone back up and made the next AO slightly lower. So based on that, to me it looks like we probably have an A, B, C, and then a 1, 2 coming down for 3. So it really wants to break this 4-hour 200 EMA line to be pushing back lower. So to get that, we're going to have to see some weakness in the US dollar and some strength in Canadian, and that may happen sometime today. The OPEC may announce that they probably got to lock in some price or some agreement. So when that finally happens, if that does, that will definitely push the US dollar lower. But if it doesn't, the CAD's going to fall as the oil price falls, which then pushes back higher. On a 1-hour chart, what we can see is a nice large AO with this push down lower. There's your AO, so we can assume this is probably wave 3. This might be 1, up for 2, down for 3. So we'll quickly go draw that in for you. Now generally a wave 2 can't break the highs of wave 1. In this case it just broke it by a pip, so I'm just going to ignore that 1 pip move there. It very likely probably was on some type of news announcement. The main concern is that daily horizontal support line is definitely below that now, and now below the 1 hour 200 EMA. So I'm liking those odds for my favor. So here, if this is a wave 3, we need to see the pullback for wave 4. This is all of 3, back for wave 4. We want to see it come back to a minimum of 38.2, which we had come back to 61.8. And then you'd be looking for your entry positions. Probably looking at a 70, 80 pip stop loss. Definitely looking at 70 pips to the bottom. So bring it to break even, coming down to the bottom there, and then riding it down even lower. So if you're not in this trade already, you could wait to see if it pulls back up to this resistance area again, and then get short again, maybe looking around 80 pips instead of 70 pips. But if you are short already down these levels, you're probably considering bringing it to break even. How far will it go? Again, once you've entered the trade with your Fibonacci retracement tool, use your Fibonacci expansion tool. That's where you go from the low to the high, or from the high to the low in this case of wave 3, pullback of wave 4. Again, the first area of support will be that low. That's why you want to bring it to break even. And the next area is down here, with the final area being just before the next daily DSR zone. So if you did get in around this price and risking about 80 points, down to there you can make 160. So definitely you can make your 1 for 2 risk to reward before that next area down there. The next one on the charts is the pound New Zealand. Here we've seen this large AO here for wave 3, starting to pull back for wave 4, starting to find some resistance around these DSR zone in between here. Dropping down to the 4-hour chart, we have our AO divergence, higher high in price with our lower AO. It's starting to bounce off this 200 EMA line on the 4-hour chart. So what is probably likely is going to push back higher. This could be wave 3, the large AO. So for me, I'll just look at the whole position being wave 3. And it did pull back to its minimum 38.2. So this could be the new pushback lower for wave 5. But if it doesn't go too much lower, you could still consider this one as an entire move of wave 3, but technically it has come back above the 0 line, so this is wave 5 on the 1-hour chart. But if you're looking at a bit of a pullback on the 4-hour chart, you could still look at getting in roughly around these levels up here, and then you could probably be looking at a 180 pip stop loss, and you want to ride it down to the next DSR zone. So down there you can make another 900 pips. So even if you're going to risk 200 to make, say, 800, there's a 1 to 4 risk to reward opportunity, and they're the ones you want to be looking for, some great opportunities. There's another one coming up also on the New Zealand USD, which looks very similar to this, but obviously in the reverse direction, both with the New Zealand being the strength pair. And the last one is a WS30, which is the US 30 top 30 share market. So at the moment we can see it's pushed higher again. It's still trying to find, it falls one day below the daily 200 EMA line, and then it closed back higher. And this one tried to close lower, but back higher. So until we get a couple consecutive days lower, we're not going to see these pullbacks. So when you see something like 1, 2, 3 days lower, breaking this DSR zone, that's where you would look at getting in, putting stops around up here and trading it down there for 1 to 3 risk to reward. So until we see those consecutive closes below this line, it's still bullish, but at these levels, jump up to the weekly time frame, nothing, even a monthly, nothing. So these are some new highs. So would could be seeing initially a pullback to these levels here. 4-hour charts, obviously we want to see our AO divergence before we take any trade. Higher high in price, lower AO, just came back just below the zero line there. So based on that, I would then drop down to the 1-hour chart. I can see AO divergence again between the same points. I really want to see it break below this 1 hour 200 EMA. So if it can see it pull back down into there and then hopefully a retest around that mark, I probably would be looking at an entry there. Stops above here, somewhere between 1500 or 150 points, and then trading it down to this zone first. So that's probably a 1 to 4 risk to reward you could probably make on this trade. And again, they're the ones you look for, because if I get this one right and make 1 to 4 or even 1 to 3, if it tells me to get out earlier, then you don't have to win once and you can afford 3 losses just to break even. And that's why having a good risk to reward, you can only need probably a 30 to 40% success rate to still make money. So thank you for that. That was week 48 of the Forex market review. So just keep an eye on the high importance news on the US dollar coming out on Friday for us in the east coast of Australia. And just take note of which way that may push the market, being the overall share market in the US as well as the US dollar. Now, again, I wouldn't expect it to come back, or I do expect it to come back a bit, the US dollar strength, because I think it's overbought at the moment. So that bit of a pullback, it would be a good opportunity to go long again, ready for the Fed news. And it's very likely they will drop interest rates. Now, if they don't, you're going to probably see the US dollar tank. So just look at your risk to reward, stick to your guns, and then jump into the trade if your rules are met. And don't worry about emotions. Same with me. If my rules tell me get in short or long, I'm in. I just have a look at the fundamental direction just to give me a chance on whether or not I'm going to try to get in a better price or get out a little bit earlier. We wish you all the best in your success. Take care. Bye-bye.